Hi, thanks to speakers and everyone for joining us today. So as Xenia rightly set the stage that we are here to talk about, the next wave of innovation in the MF industry. So I want to start the session with this very question. If one by one you could share your views on what do you think according to you is the next wave of innovation in the MF industry? Yeah, we can start with you, Chetan.
I'd say, as the previous speaker was also mentioning, that the passives will be coming in some shape or form. I'd say there will be a lot more quantitative investing coming through, and that's my space. So that's what I'm pretty sure of.
Hey, thank you for inviting us. I think on at least on the side of Paytm money, here is how we think about it. There are two ends of the spectrum. A, how can we get there are 350 million UPI users today in India, but the mutual fund base is so small, right? How do you get about another 100 million people, 200 million people into MF, right? And I think that's going to be a big job. Somewhere, it's easy in India to buy something for 500 rupees, but you can't buy an MF. Right, and I think it's really difficult. You have to hop through KRA, then you have to hop through different things, and you have to do a bunch of stuff to do your first 500 rupee investment. And I think somewhere, an AMC, somebody like us has to flip that around and say, hey, how can you make it easy? So I think that's one big wave that somebody's going to come and do a UPI in this sector and say, I'm going to have 300 million investors, right? And I think the day that happens, this whole sector will take a important change. So that's on one end. The second end is about account aggregator. I think it's a fantastic new thing that's happening in India. And that's on the other end of the spectrum, which is with, I would say, richer / more advanced / people who are already in the category, right? Because there, all of a sudden, now data and technology can flip the game. Because for the first time in India, I think, we all think of households, right? Like if somebody asks me, what's your wealth? I'll calculate the whole wealth of my family and say it. But because our PAN cards are independent, we have different accounts. So there's actually no one place that anybody here in the room can say the wealth of my family today is so much. And I think account aggregator is going to flip that problem statement and make it very easy to be seen on an app 10 times a day. So I think these two ends of the spectrum, and we can talk about it as we go forward.
So, Shipra, I'm going to flip that around a little bit, and I'll borrow something which Swaroop said, which is we are a fiduciary business. Right? So in a fiduciary business, I don't actually prioritize innovation for the sake of innovation. I don't think that's what you should do in a fiduciary business where you're dealing with other people's money. I think some of the innovations have happened in the external ecosystem. We need to figure out how we can incorporate that into our business model to reduce friction for customers, to increase the extent of conversation we have with the customers, and the extent to which we can educate to onboard new customers. So that is where we would really like to use innovation. Finally, and again, just looking back at the landscape that both Ashish and Swaroop pointed to, I remember this conversation I had with the guys who run Baskin Robbins many years ago, and I asked them which ice creams sell the most, and they said, it's vanilla, it's chocolate, it's strawberry, right? That's it, right? So I don't think as an industry we have sold enough vanilla, strawberry and chocolate. As far as selling bubblegum ice cream and blueberry ice cream is concerned, we'll do a little bit of that, but I think our task is to get the vanilla, chocolate and strawberry out there in large measure.
Right, quite interesting. So Vetri, just adding to what you said, you pointed out three things. So where do you think AI can help AMCs in solving these three challenges and aiding these three challenges that you just pointed?
Sure. So when you talk about AI, and when you first told me about this panel, I was worried that you will ask me to talk about investing in AI, which at this point of time, I think it's still a sort of blue sky area. But when it comes to using AI in business, From an asset management point of view, I think we are eventually in the business of alpha, right? Creating that additional value for investors. So clearly AI can be used over there for pattern recognition, in the allied domain for better risk management. And I think that feeds into the core of what we do, which is investment management and the management of risk. The second part in which I think AI will be used by asset management companies is, remember, we are actually a very high volume transaction processing business, right? Right from the trades which flow through us to customer level transactions. Obviously, there are different outsourced bodies or stakeholders who work with us, but I think a lot of that can be simplified using AI. And finally, it comes back to the earlier point I made. When it comes to conversations with the customers, which are transactional, which can be educational, I think once again over there is tremendous scope to use AI. I think as far as the alpha space is concerned, I'll just add one caveat, which is that to my mind, all good investing is a combination of science plus art. Now we can debate whether it is 80% science, 90% science, only 20% science, the rest is art, but it is a combination. And therefore I think the AI can play a very significant role on the science part, but I think you will eventually need that little bit of art to kick in, particularly in the active side of the business. And as a good pilot once told me, when you hit a crisis, it really matters if you have an experienced pilot at the controls. You don't rely on fly-by-wire at that point of time.
Right. Chetan, what is your take on this?
So all the things that Vetri mentioned, it can also help. See, anywhere you have data, good quality data, you can use machine learning to make better models. In fact, most machine learning will improve an existing model, because when you look at an existing model, you actually, which you've taken out of the book, or even if it's a regression equation, you actually don't know whether you've underfit or overfit it. You have absolutely no idea how to assess whether you should take 10 years worth of data to calculate a beta, 5, 3, 2, 1, what's the noise level? So in terms of using machine learning for that, you will always trump an existing standard box standard quant model. The other take I have is, if you have a lot of customers, which you have in the mutual fund industry, means you have a lot of data. That means you can create profiles of customers. You can see what their income is, where they like to invest, how they like to invest, what are their holding periods. You can create products, or you can help sales to sell the right product to them, or even push certain kind of products which would suit them, because you can really classify them extremely well based on their entire distribution of, so as somebody mentioned, there were 3.8 crore mutual fund investors. That's a fantastic number. You can create a nice distribution. You can really take out a lot of information out of it and create product which would suit them. So I think in sales, you can do a tremendous amount of things. And the more data you have, the better it is. But most of the time, the challenge is, how do you treat the data? So as Vetri mentioned, you need an experienced pilot. The biggest challenge with most machine learning problems is, generally people just hire a couple of guys, throw the data at them, and say, well, do something with this. What you really need is domain knowledge to really figure out what the boundaries are within which you will do machine learning, how you will treat the data, and how you will interpret the data. So on the face of it, it seems very simple. It's actually a huge amount of work with data. We spend 75% of our time figuring out whether the data quality is good. And data quality in India is a big challenge. So we spend most of our time trying to figure out, is this even going to be good enough? Because the model will be learned from the data. It's not coming from a book.
Right. Very rightly said. Varun, for somebody like Paytm Money, I'm sure the use cases are much more. So of AI. So, what do you have to say?
I think here is the problem statement which maybe AI can solve, which is around education, right? So let's take this room, right? I'm sure everybody here understands what an NAV is, right? I'm a Tamilian. When I was mentioning it to somebody who was there, he said, "Sir, ye kaun sa naya Tamilian naam hai?" Right? Because most people outside of this room do not understand at all the language we talk in this room, right? Unfortunately, we made sure that mutual fund is in English. As a distributor, I keep telling people, hey, when can I get a Hindi, Tamil, Telugu, Kannada, Gujarati, etc. version? But there's none of that, right? Because we talk NAV. We start off with NAV, we start off with schemes, we start off with hybrid, multi-asset, debt. Just think about it for the guy outside or the people who are here, right? Who are not capital market people like us. It's impossible to understand that language. Now, here is what AI can do, right? All of a sudden, a large language model, very simply put, to add to your point, if we were to get basic domain knowledge in, you could very quickly have an Hindi-only investor app. You could actually go ahead and then communicate during onboarding, what does this mean? You could then communicate when the market goes down in the local language, right? And you can maybe do it in English or in Gujenglish or in Taminglish, or there's a nice movie getting released in Chennai, I think, today, tomorrow, and there's an office holiday. So everybody's going to be talking in that language in that state. And I think AI can literally come and solve that problem. So that's one end of the spectrum, which I feel technology, data sciences can get together and maybe convert the funnel all the way from generating curiosity to getting onboarded, to getting this first SIP started, and so on and so forth. The second part where I think it can help is complex investors who don't have time. We have a bunch of investors now, and we've done about 25 million transactions annually in mutual funds. We have a bunch of investors who have at least 30 schemes in their portfolio. It's kind of crazy. Right now you're having 30 schemes, I don't know how they track it. Right? Like just imagine 30 schemes and they're doing all these SIPs. So I feel somewhere a lot of lookalike models, a lot of what's the next best, how do you churn, how do you keep your portfolios together, what do you do? I think some of that can become very automated because at the end of the day, MF is a very thin spread business. Right? Everybody sitting here actually makes very, very thin spreads. It's a business of scale and volume. So to get that right, you need to bring your costs down, right? Be it transaction costs or be it cost of distribution. So to do that, I think AI will again come in, and technology generally, and not using the words AI for the sake of it, but data science combined with tech can literally help in cost reduction.
Right. In addition to that is that, how do you get access to quality data, which about 2 years since account aggregator system was made live. So how is that being used by, the wealth management industry and the investment industry at large to make the life of an average investor better?
So first, I haven't really seen a lot of takeoff on started, right?
Yeah.
I would be very bullish on account aggregator because it gives you a lot of data. Simply think customers don't understand what they're giving up. Then there are conflicts of getting advice from a ARN holder versus an RIA versus a direct versus your broker. So I think some of these conflicts will become real for people. All this, and somebody's going to launch something very simple called a portfolio doctor. Right? Like almost you get a medical checkup done, your annual checkup. Somebody's going to come and say, hit this button, product. And I suspect the first one who gets off the block, who combines
in, assume you have all the data possible, then yes, you can definitely make better informed decisions. You can really enhance the asset allocation and risk profile of a customer. But again, if you don't have good data, you really can't do any machine learning or AI. Because machine learning is essentially an optimization function to really make it simple. With bad data, it'll just optimize to bad data. Aggregate a lot of data. So I don't know if people here know that there is something called data brokers globally. They will sell you any kind of data, whether hacked, unhacked, legal, or illegal. So as we found doing some research about 10 years ago, that from the phone number or an email of a person and having access to all that data, you can create a 95% accurate profile of that person. So you need one data point to aggregate all the rest of the information as long as you have one key in that database. So yes, definitely it would enhance things dramatically, but up till now, India has no data protection laws, by the way. So you have all the data that you need. Soon it'll come out, and I don't know what the barriers will be, but have access to data and to extract information out of it. Extremely powerful, but you got to know how to do it right.
Right. But what's also the case is that I think SEBI has some reservations with the account aggregator system because it very recently came out with a consultation paper questioning whether brokers and mutual fund houses should be able to, should be excluded from functioning as financial information users, which is the, one category in the whole account aggregator ecosystem. Now, of course,
approach this a little bit differently. In our role as an asset management company, we see ourselves as manufacturers of products that investors use, either do it yourself or they're being advised by somebody. So I'm not so sure that we want to cross that Rubicon and get to the other side. The other point I'll make, and I'm sure there are quite a few wealth managers in this room who will echo it, very often when I talk to friends in the industry, they'll say, but I don't have full visibility because the customer wants to keep it separate. He's actually talking, he or she is talking to 2 or 3 advisors or managers at the other end. So this is not as simple as us saying, here's the way to do it. Does the customer really want to do it? And what's the benefit to the customer? I think we need to think.
At least we've been very happy to see that consultation papers are out. You write and they listen, and there's a lot of dialogue. They even call you back for clarifications. We go deep inside it and understand. Here is what we feel. On this whole account aggregator thing, I think what's important is consumer data privacy protection. Because a lot of them should understand what they're signing up for. Point 1. Point 2, I think it should be allowed, at least in our opinion, to regulated entities. Right? What is regulated entity as per SEBI? Again, is a discussion, right? Because you could be registered as a ARN holder, or you could be what I would call as Paytm Money as an INZ broker code, right? Therefore, you're far more regulated. I think as you get down into the deeper details, I'm sure, looking at the consultative paper, that the direction is right. Look, we'll have to agree that at the end of the day, like Vetri correctly said, it's the user's data, right? And he or she must understand, it's like your credit report, right? How much of your credit report, I remember in 2006, 2007, I used to be in lending. When CIBIL was launched, everybody said this data is inaccurate, this won't work, etc., etc. Fast forward yourself 15, 17 years, I think the lending space, RBI has done a fantastic job of getting this together. So if we were to fast forward ourselves another decade or 15 years, I think A has a lot of sense as long as it's run conservatively and it's run with consumer protection at the highest level. And I think that's what will happen.
Right, right. Yeah, because the two main concerns seems to be one, of course, mis-selling, because when you have that kind of data at hand, you know what to sell to whom. And the second is, frauds, online frauds, because, gullible investors could give their OTPs and all kind of, sensitive information during onboarding. Right. So, Chetan, I want to ask you the same question, that what are your thoughts on the SEBI consultation paper about, whether all the regulator entities should be allowed to become users or not of?
I agree with the point that the customer's data is the customer's data, and their protection should come first, bar anything. But again, we also do a lot of silly things which are actually some of them are actually banned because they are easy to snag. Like, for example, in the European Union, sending an OTP is illegal because it's very easy to snag it from thin air. From a Wi-Fi system here, you could snag somebody's email, right? And if somebody's sending me an OTP right now, somebody with a receiver and a laptop and some good tools installed can snag that. So it kind of depends how fast we evolve. You would expect that since a lot of these things are known, we would go 2 or 3 generations ahead and get to the final solution, which is how do we get to something which is best for the customer? But we seem to be taking smaller and smaller steps, make sure we go through the evolution by falling and learning again, even though we know where the tech needs to be. But yeah, I mean, a customer has to have their data protected, but as Swaroop pointed out, if they don't trust you, they're not going to share your data. So trust is fundamental, and that comes from doing the right thing again and again and again, and holding the wrong people accountable.
Right, right. So we still have some time left. So if there are any questions from the audience.
Yeah, my question is, whenever we are talking about innovation, there are certain things which are wonderful products given by AMCs themselves, which are value STPs, flexi SIPs, there are triggers set. So what is stopping MF industry except 2 AMCs, as per my knowledge, nobody is offering it online. So may it be a flexi SIP, may it be a value STP. So because there is a paperwork involved, because we need to create new mandates for flexi SIP separately, rather than using the current mandates if we are working with MFU or BAC NSE for that matter. So is the cost only thing which is stopping AMCs to continue, like provide this innovation online, which will make it more useful? And second thing on the asset aggregator model, when we were so much enthusiastic about asset aggregator model, and now you go to AIS for the IT return, you get all the data. So that is one part. So whenever there are redemptions, you have all the data available already. And second thing, when we have mutual fund as a solution, why do we need to move to another assets itself? When we are very much interested in knowing which different assets some investor or ourselves have invested in, mutual funds give us all the ways. Like there is no such industry which will give you CAGR. There is no such industry which will give you capital gain report, which will be same given by all the brokers. It is not about the direct equity also. So that's what the question is.
You want to take it, Vetri?
I'm happy to take that detailed question back to my team and ask them to work on some of the solutions you asked for. Please connect, and happy to take that forward.
Maybe I can at least I want to answer on the other asset classes, non-mutual fund. I'll take a small example of what Swaroop had mentioned about FANG ETF, right? I'll give you a startling number today of Paytm monies. So we have a direct mutual fund business, and we have a demat business, and we have an NPS business, right? So these are the 3 different products that we offer. And very recently we launched a bonds platform, right? Where you can buy a direct bond. And I was hearing with a lot of intent, and it was very nice to hear the whole debt mutual fund conversation. But here is the stat. 26% of our customers today have at least 1 ETF. The minute they have 1 ETF, they have about 6 ETFs within the first 3 months, right? That's not a small number. We launched our bonds platform about 45 days back. So essentially you can log into Paytm Money and buy a central government bond for 39 years at 7.4%, right? This is off the market. This is off the exchange, right? So there is no us taking, it's not the OBP regulation, because you seem to be somebody who understands all this, right? So as an advisor, you can't just say it's mutual fund, because the client is not thinking that anymore. The client has already changed his perspective, right? Our clients have bought about 100 crores of bonds in the last 45 days, directly. Zero marketing, zero nothing, mostly central government bonds, right? And they're very happy. We were talking about returns earlier. They're happy with 7.5%. They're happy with 7%. All they want is stability. A lot of them, because it's not the 100% of the portfolio. So here is the thing. I think somehow the account aggregator model, or in whichever other way you want to get it, but I think as an advisor, and that's what we are trying to do at least, is to look at the 360 degree. Because I think at least we owe our clients the ability to present them, he or her, at least that number easily and in an understandable way. Then whether they decide to consult us for that or not is another second topic. But I think the level one problem to solve is to put it together.
Somebody wants to ask a question here.
Yeah, this is not a question, but after listening to you guys, I think there is an industry house which has just demerged their financial arm and will be coming out with a financial conglomerate which will have a disruptive impact in this market because they disrupted telecom, they disrupted retail. So all those changes what we are anticipating, whether it is artificial intelligence based or machine learning based or cost wise, I think we'll get to see that in a few months. That will be a paradigm shift, I think, for our industry. I'm sure that this is not a question which I want to ask because we'll all be guessing. Thank you. Good discussion.
Yeah, hi. Hi, this is Mehra here. I have a question for Varun on the innovation side. Typically, as we all know, business of investing is more about trust, and that's the bedrock of investing, and even advisory for that matter. So, how do you, being a digital company, how do you convert and build on trust digitally? Because as we all know, like the reach of digital is infinitely more than in-person reach. So how do you create this trust? And really is the trust. So how do you innovate on trust in a digital environment? Thanks.
It's a tough, it's the toughest question. Everybody keeps asking me that question, from Vijay to my investors to you to my consumers, saying, hey, how do we do it and how do we trust? Now, I'll give you some stats because I think that's easier. We've crossed about 15,000 crores of AUM. We do about 150 million transactions a year. I think it starts with the baby step. And most of our customers, I know, don't have more than maybe 10 to 15% of their assets or their values with Paytm money, for example. But slowly, they take the baby step. How does that happen? I think the digital product allows you to remove what I would call human emotion, bias of selling, etc., from a perspective of a distributor like us, right? That's what you would call us, or a broker in another capacity. How do you do that? I think it's a question of transparency, right? How transparent, how easy, how simple do you make it? Because, and I'll go back to the bonds platform, right? Literally you can go there and you see three different, you can buy corporate bond, government bond, you can filter, you can do what you like, right? It's as simple as that. There is nowhere advice, right? We don't do advice. Because I believe that, okay, who am I to advise millions of users across India? It's really tough. Data is not accurate. I can't know a consumer digitally like a physical advisor can. We can never win that. So I think A is, as a digital technology platform, you've got to decide what's your boundary, what are you good at, what can you do. And once you do that, I think you need to deliver it reliably, right? Now what happens sometimes is customers go through tough periods, right? And I think that's where trust gets built or broken. Right now, those tough periods, I've had great days where we've literally managed to win trust by being honest, by being transparent, by being simple. On the other days, I think some of my customers have said, hey, look, we subscribed for NAV on this date, it didn't come through, it came 2 days later because somewhere some technology failed, payment didn't go through. I'm calling the AMC CEOs, I'm fighting with RTA saying, yaar, mere 20,000 SIPs due hain, wo late ho raha hai, kya kar sakte hain? I think those moments, they break trust, right? Now, when the trust gets broken, I think it becomes very difficult to win it back. And what we do then makes the difference, right? Now, regulator says, okay, you can't do this, you can't do that. I can't give backdated NAV. So that's gone out of the window, right? So all of a sudden, my consumer has lost by going digital and going DIY. But I think it's a journey where over a long period of time, if you're delivering 98, 99% and step by step, you do it correctly, I think you improve. The second leg is education. I think digital education is critical. Without that, nothing is going to happen. A lot of our customers are first time to market. A lot of our customers start off with 500 rupee SIPs. I've been fighting with the industry to say, hey, when can you allow us to pay your burger or your Golgappa with a mutual fund? Right? Because I think the day we can do that, we'll get trust. Right? And the name that the Paytm brand has earned on payments, will we be able to earn it on investments? Yes, but I think it's a journey. Right? We are in year 4 of our journey. So I think there's a long way to go, but we're confident as long as we continue doing the right thing, we do the fiduciary things, and we're focused on transparency. I'm sure it will come through.
Thank you very much. Just one follow-up to that. So one of the fintechs, Policy Bazaar, we've seen that they are in a way doing a hybrid to some extent, where while you have the typical platform being online, they also are now trying to have an offline presence. Do you believe in your area of operations and the broader financial services, in order to fill this trust deficit, there is a need to do hybrid?
I won't comment about competition or anybody else. I think I'm not equipped or the expert there. At least I can comment about what we think. We're going to try and solve the problem digitally. And that's the long run, because today I have one customer in every pin code of India for mutual funds. Right? And I think equally so, the physical mutual fund ARN distributor is fantastic. Right? Because what he or she knows, the Mr. Sharmaji around the corner, or I was sitting with somebody and he was talking to me about his investment strategy. They're just fantastic people. I don't think we can compete with them. So, like I said, I think we'll be focused on technology.
So, if we can take just one last question, because the time is up. So.
Okay, so this question is for Vetri, and my question is the active fund manager a dying species? With the coming of AI, we already have quant models, and we have a fund manager for the quant fund because SEBI mandates you to have a fund manager. That fund manager is doing nothing. Swaroop just now said that out of 17 countries, 16 countries, they are selling only passive. India is the only country where they are selling active. Varun said that the person buying an ETF now buys 6 ETFs in the next, 3 or 6 months. How long will we be able to, fight this AI, or will AI become our fund manager?
So, I'll go back to what I said earlier, which is, to me, good fund management is science plus art. And you can use AI in that science component, but eventually there is also that art component, and I don't think AI can really fill in over there. So I think you'll always have a combination. We can use AI in that science component. Maybe I won't need as many analysts as I do today, because some of the processing that they do can be done by AI. But as far as the active versus passive is concerned, my belief is they will coexist. They will coexist because both have room, and the incremental value that you get out of active in terms of the alpha that it can create for you is something that many people would say, I want that additional, right? So to my mind, these actually coexist, Deepak, but I think to Swaroop's point, we need to keep in mind that as every market evolves, as information arbitrage vanishes, as the market gets more and more well developed, well regulated, the ability to extract alpha becomes harder and harder to find ex ante, right? Post facto, you will always find that somebody had alpha. But as an investor, my challenge comes ex ante. How do I know who is it will have alpha in the future? And that is why, to my mind, you will find that significant amount of market share over a period of time will go to passive. I think the challenge for me, and I've been an active fund manager all my life, is to try and make sure that we are at that cutting edge where we are able to combine man and machine in a way, going back to my flying example, that when that crisis hits, having the man plus the machine is what will actually give you the advantage.
All right. Thank you very much to all the speakers and everyone listening. Thanks.